Of course, a lot of earnings that have been coming in, and Lupin, that is the stock on our radar right now, reported a weak set of earnings for Q2 FY22. Revenue came in line with single-digit growth of 7% YOY. Margins reported are also down year-on-year basis, though pickup in US and India sales is a positive. Nilesh Gupta, the MD of Lupin, Vinita Gupta, CEO of the company, and Ramesh Swaminathan, Global CFO and Head Corporate Affairs, joins us now to discuss more on Q2 earnings. Ladies and gentlemen, thank you so much for joining us on CNBC TV18 to discuss the way forward. Let's talk about what's happening as far as the stock price is concerned. It's down around 3.5% as we speak. And, we'll actually get in Ekta to take this discussion forward.
We were on the path to really improve our margins going forward. And we saw on the specialty side of the business, especially through COVID and lack of access to the OBGYN offices, we were not seeing a good return on the Salesforce investment. We were not getting access to the offices. So, so we decided that we are going to downscale the specialty infrastructure, commercial infrastructure. We have built product awareness over the last couple of years. So we decided that we're going to turn towards non-personal promotion primarily, and hope to stabilize the current scripts and then figure out ways of growing it, but at a completely different cost base. So it was a very tough decision for us, as you can imagine, but the right one for the organization, where we need all of our investments to deliver results. We felt it was essential to really bring the burn down from the specialty front and find a different way to grow the specialty business.
Vinita, have you exited the specialty business in the US?
No, we haven't. We have the product available, to all of the doctor's offices through our non-personal promotion. And no, we haven't exited.
Okay. Ramesh, one of the things which stood out again were the margins this time. Last quarter, the company specifically guided that there would be margins of around 17 to 18% for the entire fiscal. But if you look at, say, for example, Nomura's note, there on an adjusted basis, the margins came in at around 14.9%. What took place this quarter? What is your expectation in terms of costs? And are you sticking by that guidance of 17 to 18%?
Ekta, thank you for that question. I think it is wrong to state that we actually guided for 17-18% for the full year. Actually, I was pretty explicit in stating that second quarter would be indeed a tough quarter as the first quarter itself. We expected this actually at the beginning of this year. So this is in line with our own expectations. Nomura is actually right in saying that the margins are 14.9%. The reasons for that is it's in line with what we had guided. Per se, this comes in from, in fact, a lower R&D expenditure, of course, a lower employee benefit as well. But you would also recognize there have been, reduction in terms of gross margins, as well as increase in other expenses, largely led by sales promotion, travel, plant, and so on. We do expect things to become better during the course of the next 2 quarters, so to speak. There's, of course, the sale of acute therapy products and sales mix coming on, ramping up of albuterol and the like, and of course our initiatives on various fronts, including that on the gross margin and various other initiatives that you've taken along as G&A and the like. So you would expect it to increase during Q2 and Q3 and Q4. But for sure, Q2 was in line with what we had guided before.
Okay. Ramesh, can you give us specific numbers for the next 2 quarters or maybe a range? And when can we historically see margins go back to those levels of around 19 to 20%, the historic margins that you enjoyed?
Ekta, I would like to stay away from actually guiding. But I would say in a general sense, you could expect things to become better. It is certainly not going. It is not going to reach the levels we spoke about, 20% in a hurry. It is going to be some quarters before we get there. But for sure, we do have a roadmap, a glide path to get there, to getting there. It is really professional pride that calls for it, and we would do that. But bear with us; it will actually happen over the next few quarters.
Okay. Well, Nilesh, sure, go ahead.
Sorry, I was just going to add that while it's going to take a few quarters, but as you know, the point is that we should see improvement successive quarters. So obviously, we're expecting Q3, Q4 to be better than what we did in Q1, Q2. And that story should continue into the next fiscal.
Okay, that point is taken in terms of margins, Nilesh. But one parameter that stood out was the growth in India, 16%. How much do you think you can do in the next 2 quarters? And have you shifted focus away from COVID opportunities, exploring them simply because of the kind of tapering that we've seen in any case?
So India continues strong. Obviously, we had a very strong first half, primarily driven by COVID in the first quarter. The market growth rate has normalized, and we would expect to continue growing at 20 to 30% more than the market growth rate. So 12-13% is what on a year-on-year basis is what I would expect for Q3 and Q4 as well.
Okay. Vinita, coming to the US business, you all improved from the previous quarter, which was around $172 million odd. You've come up to around $184 million. How much can we expect in terms of a quarterly run rate for the US and the contribution from your key drugs such as albuterol, where the market share has risen, as well as the flu season, which is coming up, which could probably be better this time?
Yeah, so it's we're really waiting to see how the flu season pans out. So far, we haven't really seen it pick up at all. But without the flu season products, when we look at our base business and our respiratory franchise in particular with albuterol as well as Brovana, we're confident of growing the business in the US in the quarters to come. In terms of new product launches, we have no material new product launches now in the next couple of quarters, but just given the ramp rate that we are at in building albuterol and Brovana, we feel good about growing the business.
Okay, any visibility on Spiriva?
So Spiriva, actually, we settled the litigation with BI. So I'm very pleased that we have certainty on launch. We have been able to get a very favorable date that we will be able to disclose post-approval. We remain on track on our efforts to get product approval by mid-next year. And it continues to be a near-term growth driver for the organization.
Okay.
So really pleased with the progress there.
Okay. All right. Nilesh, I wanted to ask you about, one, the Goa plant, and what your expectation is, and in terms of the entire focus on compliance this time, when can we see the other plants probably get inspected? Are you confident of the Goa plant being cleared?
So, we had 7 observations at the Goa plant. You've seen them. They were largely, they were very addressable. And in the first update that we would send to the FDA, we would be able to address 6 out of 7 of those observations. The other one would take a little bit more time. So we feel very good about being able to address the observations comprehensively and in a very timely manner. I don't like the fact that we had 7 observations, but we're able to address them really strongly. And I feel good about what should happen next. Of course, the ball goes back in the FDA's court to make a determination. But we are addressing it very comprehensively. As far as other plants is concerned, obviously FDA inspections slowly are restarting. We are ready for inspections at our other sites, including our OAI sites, both for Pithampur 2 and for Tarapur. We've told FDA that we're ready. Okay. So, we don't have a date, but I would suspect in the next couple of months that we should have inspections there as well.
All right, that's the word coming in from Lupin's management, but Gujarat Gas's numbers are at the bottom of your screen, and it looks like